Welcome to the Money Watch Show. It's Sunday, March 30th, and we are here trying to help you make better, maybe less bad, more considered financial decisions. And part of the way that I'll get to who the we is in a second, we do that is we try to help you understand some of the I would say, speed bumps and even big barriers that are between you and getting where you want to go in your financial life. So we is me. I am Jill Schlesinger, CBS News business analyst and certified financial planner. And the he over there is Mark Talercio, who is the executive producer of everything that I do, as well as a certified financial planner as well. Hey, Mark, it's the end of the first quarter. How are you feeling?
Feeling good. End of the first quarter. April's here. Baseball has started. Hockey playoffs are around the corner. It's a pretty good time of year.
Yeah, it's never as good as, you know me, because I'm, even though I'm a former soccer and basketball player, the end of the NFL season is always very sad to me. And it's too early in baseball to get me excited. I just can't go there.
I understand it is a slog. I get excited for April. Then it's just like, I'll check back in mid-August.
Absolutely. And the thing I love about this time of year, to just like bring it to like the high nerd level, is that because it is tax season, we just have 2 weeks to go before tax time. Taxes are due. And I know most people have already filed, but it does attune people to their financial lives a lot more. It does kind of allow us to talk about these things that, maybe in the middle of the summer, not quite as fun to do, but I think really worthwhile. And so oftentimes when people will say to me, why do you like tax time? Taxes are the worst. I said, because you find out a lot about your life when you are preparing your taxes. And it might be that you realize, hey, I make more money than I thought, or I'm not making as much money as I did the year before. Or maybe it's, I have money to put into a retirement account for the first time in my life. If there's anything going on that you learned during your tax prep season, you should get in touch with us. Go to jillonmoney.com. That is our website. Put a bookmark there. Let's go. And then click the Contact Us button. It's in the upper right-hand corner. And that Contact Us button will be in that upper right-hand corner wherever you navigate on the website. While you're on the website, don't forget to sign up for the free weekly newsletter. Mark, we're back in action. I was telling Mark that everything got filtered out. I don't know what happened, Mark, but I did receive the last one. And you do a darn good job putting that together every single Friday. What a great way to prepare for the Money Watch weekend show. I love it. So thank you, Mark, for doing that. Prego, Jill. How do you say my name in Italian? There's no Jill. I think it's Giulia.
Julia.
I think it's Julia, perhaps. Okay.
Cesarino.
Oh, yeah. I'd love it. That would be good. All right. Let us go to our listener, Tyler. He's joining us from Nashville. Hi, Tyler. What's going on?
Hey there. Good morning. Bright and sunny here in Nashville.
Oh, pouring rain here in New York as we talk to you. What's happening for you? How can we help you?
Yeah. So quick question. So for about the last 8 to 10 years, I've been opting to contribute to my 401k in a Roth. So after tax contributions, I chose this route because I was speculating that taxes or income taxes would be higher in the future versus in the recent term. So right now I'm 32 years old, just for perspective. So in 30 years, I was assuming income taxes may be higher than they are currently.
Okay.
So I originally thought this was a savvy move, paying taxes up now versus when I was looking to retire.
Okay.
However, there's been recent discussion of potentially omitting the federal income tax in favor of a more consumption or sales-based tax. And I was curious if you guys had a perspective of if this were to happen, would that ultimately mean that I'd kind of be double dipping on taxes, right? If I'm paying taxes now, then I'm also going to pay increased consumption tax in the future. I don't know if you had a perspective. I'm not really akin to politics or what actually is going to happen, but if you guys have any opinions, I'd love to hear them.
Oh, it's a great question. So Tyler, you're 32. Are you single, married, partnered? Married. And does your spouse work as well?
She does, yes.
How much do you earn together?
She's the breadwinner, so probably $450, I think.
Wow. Okay. You're young. Jeez, Louise, do you have kids?
Not yet. We hope so.
Okay, great. Any pension that you guys will be entitled to in the future?
No, ma'am.
Ma'am. Love that, Mark. That sounds like I yell at Mark when he says ma'am. How much have you put away in your 401k, the Roth 401k?
So mine is about 150.
Great. Amazing start. You're so young. And that's all Roth, right?
Yes, ma'am.
Okay. And your wife?
So we have separate accounts, but I think all of your retirement accounts together are roughly 1 million.
At 32?
Yeah,
See, Mark said, and so that means 850 for her and 150 for you, or 1.15 are we talking about?
1.15. However,
Okay.
mine is Roth. Hers is
Pre-tax.
Traditional. Yeah.
Okay. I think it is going to be very hard to move to a consumption tax in this country. So let's go back. Right now, let's talk about what is the United States tax code. This is going to be fun. Don't go to sleep, everyone. We have what is called a progressive tax code. What does that mean? It means that the more money you make, the higher the interest, the tax rate goes. So let's say that if you are married filing jointly, and this year you make underneath $23,850, you will pay a 10% tax rate on that. But let's say you're like Tyler and his rich wife. Okay, you got 450 grand of income. That means the first chunk of income up to 23,850, there's a 10% rate applied. Then from 23,008 to about 97,000, it goes to 12%. Then the next jump up is a 22% bracket. So the next chunk of money. So again, it's the rate applies to each tranche of money. When you get to 32%, that bracket starts at $394,601 up to about $500,000. And so that last chunk of money for Tyler and his wife is taxed at the 32% bracket. In other words, he's not at the 32% bracket overall. Let's say that last 50 grand of income would be taxed at 32%, presuming you don't have a way to whittle it down, but we know you do, by the way. So, okay. So here's the bet that Tyler says. And I think this is you want to articulate the Ed Roth case, that's funny. The Ed Slott case. We just interviewed Ed Slott. So Tyler, your timing is amazing because Ed Slott is the guy who is the IRA and Roth IRA expert. And what was his conclusion in terms of whether or not to use a Roth, especially if you're younger? Mark, can you articulate the Ed Slott position, please?
Well, if Ed was on this right now, he would be telling Tyler and his wife that not only should Tyler be making Roth contributions, but so should his wife. And the fact that they make so much money right now, odds are for the next 20 years, they're going to be making this amount and then some, because they're not going to be making less. It just doesn't really ever happen that way.
And so, Tyler, the interesting thing about that is your idea about, well, tax rates could be higher. It is true. But let's say tax rates stayed exactly where they were. The answer might be that one of the reasons that a lot of people like Ed Slott, a lot of tax experts like the Roth, is that they want to know what that tax liability is now. And in a consumption tax, maybe that will be going forward that it would be a consumption tax, but there would still have to be some conversation about what would happen with retirement plans. And I guess I don't really see us going full on to a consumption tax. Do you know why? I'll tell you why. Because a consumption tax is actually a complete regression in a tax code. A consumption tax, like the kind of tax, and by the way, many countries have some sort of consumption tax, like a value added tax. When you go in Europe, you'll pay a VAT. The biggest problem with a value added tax is that it hurts people at the lower end of the income stream way more than anyone else. And once people realize that they are paying so much more in taxes, chances are the people who voted in that tax are going to get bumped out. I don't think the U.S. has a real way to actually create a value-added tax right now. Maybe we'll be wrong, but I still like the idea that you are using a Roth for you. It would be interesting. Does your wife have a Roth opportunity or not?
I think she does, but she opts out of it.
Can we convince her otherwise? Probably not.
We could try, yeah.
She's so young. She already has $1 million in tax-deferred money. I mean, that's just going to continue to grow and grow and grow.
We call that a ticking tax time bomb, meaning that even if we went to a value-added tax, is the government going to just say, you know what, Mrs. Tyler, guess what? You don't have to pay us all the tax that's due on that money. Do you think that that's a possibility? I don't. I mean, there's no way that Congress walks away from all the money in retirement accounts without taxing it. So the problem for her is that if you have that $1 million today at age 32, by the time she gets to be 75, and it may even be later than that, but let's say 75 when she's forced to pull money out, she will have to pull money out at whatever the tax rate is at the time. So a consumption tax would never replace an income tax. It might be layered on top of, and maybe tax rates would stay the same. Let's just say tax rates stayed the same for 35 years. She would still have to be paying that tax that's due. And that is a big chunk of money. I mean, Mark, can you just do a quick what happens to 75?
You're looking north of $10 million.
Okay, so $10 million that she has. And again, I'm not updating. I'm doing this based on today's dollars. If she had $10 million in her traditional account, the government would force her to pull about 400 grand out right now as a required minimum distribution. So you would automatically have at least $400,000 of income at some tax rate in the future. Not much different than where you are right now. So I'd rather pay my tax now. I just would. I would rather have her at least put some money in the Roth if she can.
Okay, that helps. Thank you.
Is that good? Is that good? Okay. Now, do you guys have a house?
We do.
How much is it worth?
It's about 600.
And do you have a mortgage that's outstanding?
Yes, about 300 left on it.
And what's the interest rate on the mortgage?
2.2, I think, 2.3.
So you're never moving, right?
Correct.
Okay,
Yeah.
thank you. I appreciate that. Is there anything else in your life that you need help with? Like, do you have a brokerage account? Are you looking ahead and thinking about a second home? Anything else that's on your horizon?
Yeah, we have this dream of buying a place in New York.
What? We love
the
you.
opposite way, right? So
no, we want. Please come and pay taxes with us.
Where do you want to live in New York, Tyler?
Yeah, we're about to find you an apartment. Where do you want to come?
Park Slope is nice.
Mark's neighborhood.
You be my neighbor.
Also Greenpoint. We were just over there for a few weeks, and we really like the community over there.
Mm.
Okay. Yeah. I'm a little less enthused about that. But
Did you hear that? Did you hear both of us go, okay, interesting. That's a nice place for someone for Nashville. Although you can get lovely countertops in Greenpoint, Mark. You know, that's where all those marble makers are. Mm-hmm. It's very nice.
My good friend of mine lived in Greenpoint, but he just wasn't in love with it. He didn't love the vibe, so he moved. Now he's in Fort Greene.
Well, I like Fort Greene. It's kind of interesting. I mean, I think that Greenpoint can be very commercial depending on where you are, right? But I also think that if that's a dream of yours, do you guys have a brokerage account? Do you have money that you're saving outside of retirement right now?
He does. Yeah.
What's in there?
It's part of that 1 million. I'm not really sure. Yeah.
I mean, if you really think you want to buy something in New York, just, yes, of course, put money in retirement accounts, but also make sure you have some brokerage account options. And we would love to have you. Mark and I are about to send you. So what do we have to get for you when you come to New York? Like, now I'm worried because you say you're going to have kids. So does it have to be some big apartment, or can it be like a pied-à-terre, a little 1 or 2 bedroom?
I do need at least 50 square feet of yard, which is going to be hard to find, I think. I really like landscaping, kind of just being out in the grass, have a grill. So I got to look for that. And that's going to be, I think, a hefty price tag. But
Mark, where do you find many yards in Brooklyn? You could certainly find it in Queens.
Yeah, well, I skipped the yard and opted for the rooftop.
Oh, well, okay.
So, and he's got a beautiful garden up there. Absolutely unbelievable. So I think we can find you something, Tyler. I feel good about this. Last couple of questions, because I know you're going to probably have kids. Do you guys have estate documents done? And do you have life insurance already?
So we have life insurance. We have not even talked about estate at all.
I mean, you could probably just have we call it a sweetheart will. I leave you everything, you leave me everything. Just throw it down on a document. And then also what I call like kind of the essential 3 documents, which would be the will, the healthcare proxy, and the power of attorney. That's like, if anything bad happens to either of you, the other person can act as your agent. And I think that's a good thing. Those are just 3 very clean, easy documents to create. If either of you has legal services available to you through work, use it there, or, glom off of a friend who's a lawyer. Let them help you out.
Awesome. That's fantastic. Thank you.
All right. If you have a question about Roth versus traditional, if you've got a question about how to make a plan for something you want in the future, like a little dream apartment in New York, give us a holler. Go to JillOnMoney.com. Hit the Contact Us button in the upper right-hand corner. Write us a note. Check the box if you'd like to join us on the air live. Hey, if you want to hear that whole conversation that we had with Ed Slott, you've got to subscribe to Jill on Money Live. That is where you have access to quarterly live webinars, bonus audio and video content, our entire back catalog. It's all for I almost said the old price, all for $45 for the next 12 months. Jill on Money Live. I think people are paying $45 just for the Ed Slott interview, Mark. It's pretty amazing. All right, you can subscribe to us on the Odyssey app, where you can also subscribe to our sister broadcast called Jill on Money. On both shows, Mark is the executive producer. He is the king of all things web. We drop our episodes of Money Watch on Saturdays and Sundays. Please leave us a rating and review wherever you listen. And we like to remind you to do something nice for someone else today. Change your work, change your wealth, change your life. Thanks so much for listening. We'll talk to you next week.